the highs today. But this is a super Monday, and to really get a sense of how things are looking from here on, how you should approach this market and position yourself, we have Gautam Duggad, the head of research for institutional equities at Motilal Oswal Financial Services, joining us now to discuss the impact of this big state election result, their preferred sectors, and lots more. Gautam, thanks a lot for joining us. This is Pavitra. You know, we were looking at the data on how the market tends to behave in the 6 months before and after the national elections. It's around 4 to 36% in terms of a rally before, and after it goes up almost to around 38-40%, right? Take us through how you think we're positioned right now, and do you think that this is just the start of what is going to be a multi-year bull run? Gautam, I think you're on mute.
Yeah. Good morning. Am I audible now?
Yes, we can.
Thanks for having me. To make sense of what just happened, I mean, see, we were doing quite well fundamentally any which ways, macro, micro, both were looking quite good. We just saw the GDP data a couple of days back, first half 7.7% print. A fortnight back, the corporate earnings concluded. We have seen a 30% earnings growth in Nifty in the first half. Inflation has almost peaked out. Globally also, there are talks of rates having peaked out. Crude is well behaved, and bond yields are also in control. And on top of that, even the October and November high frequency monthly data was quite good. So the only factor which was keeping the market anxious was the state polls, and which yesterday got out of the way. And the outcome was obviously better than what the market had expected. This obviously clears the pitch for the next 6 months and bolsters the sentiment of political continuity. As far as the pre-election rally data that you referred to, if you look at the last 25 years and 5 Loksabha elections, every Loksabha election, 6 months into the announcement of the election results, which is between November to May, the markets have given positive returns. The lowest return we got was 9%, and the highest return we got was 35-36%. Obviously, a lot of these data points also need to be looked in context because there were other factors as well. For example, in 2009, this whole pre-election rally also coincided with the global financial crisis recovery that we have seen. And it then continued after the elections as well, because that was one period where markets gave 30% plus return both 6 months before and 6 months after. As far as the current environment is concerned, I think we are quite well positioned because valuations are still very reasonable for large caps. If you look at Nifty, we are trading at about 17.8 or maybe 18 times now after today's percent move, which is still at a discount to a long period average of 20 times. So growth, valuation, this construct is looking extremely constructive in my view. And with policy momentum continuing, given the potentiality of the third regime in a row for the current dispensation, I think a lot of people who were sitting on the sidelines, the money which was waiting for this event to get out of the way, maybe they will have to prepone that decision to invest because most of the stars are now aligned for India.
Gautam, morning. So what can puncture this rally? Valuations are reasonable. It's not that valuations are rich, which is enough to bring about a correction in the market. The global outlook is not as bad as what was feared 6 months ago. US economy has pretty much managed a soft landing despite raising interest rates. The fear was that when you raise interest rates so much, we will get a hard landing or a recession. That's not played out. It's rare, but it's not played out so far. So even the global picture is now a lot better than what was feared 6 months ago. So what can change this extremely bullish current stance in the market now? What would be the risks according to you?
While the sentiments are very bullish, Rima, if you look at the trailing returns, they've been very average. I mean, if you look at the last 2 years for Nifty, barring last week's move, we've been pretty much flattish. So Nifty, basically large caps haven't given you any returns from October 21 onwards. So while sentiments were bullish because mid caps and small caps were doing very well, and that is a pocket of the market which always keeps the sentiments high because retail HNI crowd is largely positioned there, right? So that's why I mentioned right at the beginning that the growth valuation construct for India is looking extremely solid right now from a large cap point of view. As to what could puncture this sentiment, I think it has to be unknown because whatever is known, market will discount it. If you look at the last 10 years, wherever you have got big corrections, they've come because of some unforeseen and unknown event, whether globally or domestically, whether it was taper tantrum back in 2013 or ILFS crisis domestically in 2018. So those events were not forecasted. And that's why I'm saying that what can disrupt this strong setup is something which is not knowable today, right? So risk is in the unknown.
Okay, so Gautam, considering that, we're positioned so well from an India market standpoint, this big political uncertainty is pretty much out of the way. The FII money is coming back. Globally, things are looking quite all right. How would you approach the market? For someone who's looking to invest right now, where do you think a bulk of this growth is really going to come in, and what are the pockets that you would want to be in?
So, Pavitra, what you mentioned in our note, which we released yesterday after the election results, there are four sectors where we are very constructive. The largest overweight that we have currently is in financials because the valuations are extremely attractive there, both private as well as PSU banks. We have a big overweight on PSU banks. And then we also like a couple of non-lending financials and, of course, some of the lending NBFCs too. The second sector where we are very positive is industrials, where we are carrying a big overweight too. And today morning, we have released a big thematic report on capital goods with 11 new companies initiated in it. Third sector where we are positive is automobiles. Again, overweight for us for almost last 18 months, and a sector which has been performing the best insofar as corporate earnings are concerned. Fifth quarter in a row, auto is the best performing sector on earnings growth. And last but not the least, we are also positive on consumer discretionary. In our model portfolio, out of the 8 consumption stocks that we hold, 7 are consumer discretionary, which borders on most of the discretionary sub-segments like jewelry, hotel, food delivery, and even footwear for that matter. So amongst the big sector, these are the segments where we are very positive and overweight in our model portfolio. Aside of that, then there are some small segments like real estate and cement, where also we have a very constructive stance. We are underweight right now on technology, metals, utilities, and oil and gas. So that's how we are positioned as far as our overall stance on the all sectors are concerned.
One of the stocks in the automobile pack that you like is Hero MotoCorp. Now, Hero MotoCorp hasn't given returns over a longer 9-year period. In 2014 as well, same time, the stock price was well above 3,000 and it's slightly above those levels now. So over a longer stretch, it hasn't given much return. So can you tell us, why Hero MotoCorp in particular? What could be the extent of upside? Can it reverse so many years as underperformance?
So Rima, we've started liking Hero Motors around 3 to 6 months back because we think that the two-wheeler demand patterns can change and there can be a recovery. If you look at the last 10 years, the two-wheeler industry growth domestically has hardly seen any growth. It won't be too far-fetched to say that the two-wheeler industry volumes have broadly remained flattish in the trailing 10-year period. We're seeing some bouts of recovery there. Festive season has gone out well. Plus, in Hero's specific case, the valuations are quite attractive, along with dividend yield. So that is why we have pointed out Hero as a tactical idea in the short term to play the election euphoria or momentum, what do you want to call it. So two-wheeler, we have Hero there as our preference. Aside of that, we also like M&M. And then in the mid and small cap basket, we have Ashok Leyland and Craftsman also, which are part of our model portfolios.
Okay, got that. Those are some very interesting ideas. Gautam, just one quick question on the real estate pack, because you did mention that, that is a pocket that you like as well. Take us through why you like Godrej Properties, and I think you also have Suntec Realty as an idea. So take us through why you like these amongst the pack.
So we are positive on the entire space, Pavitra, for some time now. We think the pre-sales growth momentum is basically doing better than expectations. When the year began, we had penciled in about 13 to 14% pre-sales growth for our 12 stocks under coverage. Now, as we speak in November or December, that number has been revised upwards to 30%. Across the board, if you see 1H FY24 performance for our real estate coverage universe of 12 stocks, almost all of them have beaten expectations. So what do we like there? We like a couple of stocks. We like Godrej Properties. in the large cap space. We like Prestige and Sobha in the mid cap space. And then in the small cap space, Suntech is something where we have recently initiated. We again feel that the potential upside in Suntech is upwards of 40%, given the kind of development that we are seeing there on pre-sales and execution front. So overall, we remain very constructive on property space. We think that after 10 to 11 years of hiatus or a slowdown, we are seeing some resurgence in Indian real estate sector in the last 12, 18 months. And this can as well continue for a couple of more years, given the affordability of an end consumer which is there.
Out of time. Gautam, thank you very much for joining us on this big day. We'll slip into a break. We'll come back and discuss commodities. Manisha Gupta joins in next.